Welcome back to The Explainer. Look, today we're diving into what has to be one of the most violent, jaw-dropping comebacks in modern semiconductor history. If you've been following tech or the financial markets even a little bit lately, you already know exactly who we're talking about. But the actual mechanics of how Intel pulled this off, and more importantly, whether it's sustainable, is just a fascinating puzzle.
Okay, let's dive right into this. Just to grasp the sheer scale of what we're looking at, think about this number for a second. 400%. Back in April of 2025, Intel's stock hit this brutal intraday low of $17.67. Fast forward just about a year to early May 2026, and that exact same stock is sitting at roughly $109. That is an ascent of over 400%, absolutely rocketing the company past a $470 billion market capitalization. I mean, stories in the chip industry rarely, if ever, move at this kind of speed.
But, a massive surge like that brings us straight to the multi-billion-dollar mystery we're going to solve today. Is Intel actually fixed? Or are they just incredibly lucky? We really have to figure out if this massive new $470 billion market cap is justified by a fundamentally repaired business, or if Wall Street has just completely fallen in love with a highly compelling narrative.
And here's why that question is absolutely crucial. Because while the stock was basically going to the moon, Intel's foundry business actually lost, wait for it, roughly $10.3 billion in fiscal 2025. You heard that right, a 400% stock surge, running completely parallel to a $10 billion operating loss in their manufacturing arm. It's a massive contradiction. So, let's get into Section 1, the forced abdication in the end of IDM 2.0. Because to really understand exactly where Intel is today and how they got here, we've got to rewind just a bit to late 2024 and look at the mess former CEO Pat Gelsinger left behind. And this quote right here, it perfectly hits the nail on the head regarding that era. When Gelsinger returned to Intel in 2021, he launched this grand strategy called IDM 2.0. Basically, he wanted to double down on Intel making its own chips while simultaneously opening up their fabs to outside customers. But as critics pointed out, this was literally a TSMC-sized bet placed by a company that did not yet have TSMC-sized customers. The capital plan was just staggering. They were building massive new fabs out in Ohio and Germany. But as demand projections fell short, foundry losses ballooned, the dividend got suspended, and cash was just burning away. Ultimately, by December 2024, after a reported tense board meeting, Gelsinger was forced into retirement. Which sets the stage perfectly for Section 2, Tan's radical pivot. Enter Lip-Bu Tan. He took over as CEO in March of 2025. Tan brought a heavy background in electronic design automation and venture capital, but honestly, most importantly, he brought a ruthless pragmatism to a company that desperately needed it. And let me tell you, Tan did not waste a single second. His first-year turnaround playbook can basically be summed up by a very clean rule of 3. Cut, sell, and sign. He aggressively slashed costs, he shed assets that just weren't core to Intel's survival, and he went on an absolute tear signing marquee partnerships that honestly nobody thought Intel could land. Let's break these down. First up, the cut phase. Tan saw exactly what everyone else saw. Competitors were lean, fast, and agile, and Intel was, well, not. So he made the brutal call to eliminate roughly 21,000 to 22,000 jobs. That is about 20% of their entire workforce. But here's the kicker. He didn't just cut at the bottom. He completely flattened the organization. He pushed middle management out the door and made sure the critical data center and AI groups reported directly to him, making them way more agile.
Then we hit the sell and sign phases, and this is where things get wild. These moves injected massive amounts of capital and credibility into the company. They sold a 51% stake in Altera to Silver Lake for billions, cashed out of Solid Gym to SK Hynix, and trimmed down their Mobileye stake. But the bottom half of his playbook is where the magic happened. SoftBank bought in for $2 billion at $23 a share. The U.S. government actually converted its CHIPS Act grants into an $8.9 billion common equity stake at $20.47 a share. NVIDIA dropped $5 billion at $23.28 a share. And seemingly overnight, Elon Musk's Terafab project and even Apple were signing on to use Intel's foundries. Absolutely game-changing stuff.
Now, what's genuinely fascinating about this pivot is how Tan essentially forced a total reframing of Intel's AI strategy. He looked at the market and practically conceded that Intel was just not going to beat NVIDIA in standalone AI GPU training. Instead of fighting a losing battle, he pivoted hard. He bet that as AI shifts from this training era into the inference era, where AI is actually being deployed and queried in the real world, the workload relies heavily on CPUs. So Tan positioned Intel CPUs as the absolute indispensable host for this upcoming era, and monetized that thesis directly through that massive new NVIDIA partnership.
Okay, so Tan was absolutely ruthless on the corporate side. But let's jump into Section 3, the Foundry reality check, because we really need to figure out if the actual income statement can back up Wall Street's euphoric story.
Now, to be completely fair, the headline numbers are finally catching up to the narrative. In Q1 of 2026, revenue hit $13.6 billion, easily beating expectations. But more importantly, the data center and AI revenue grew by 22%. So the whole market story was shifting from will Intel even survive to how quickly can they expand supply.
But when we peek under the hood at the actual manufacturing data, you kind of have to be a little skeptical. Manufacturing is the entire heartbeat of this bull case, specifically Intel's new 18A node. Now, Intel technically beat TSMC to volume production for this 1.8 nanometer class process. That's great. But when you dig into the yield estimates, Intel's defect density yields were tracking around 55%, while TSMC's N2 node was already hitting roughly 65%. Look, even if Intel is technologically competitive with RibbonFET, manufacturing economics strongly favor whoever has the higher yield. And right now, TSMC for sure still has that edge.
Which brings us to what is arguably the most crucial reality check, $307 million. Look, despite all those incredibly flashy headlines about Microsoft, Amazon, Apple, and Terafab using Intel's Foundry, Intel Foundry generated only about $307 million in true external customer revenue in all of fiscal 2025. Just to put that into perspective, TSMC generated $33.7 billion in foundry revenue in just a single quarter. The gap between Intel's current reality and TSMC's dominance is still absolutely enormous. All of this brings us to Section 4, luck versus strategy. We really have to take a step back and ask a totally objective question here. Is this historic 400% stock surge the product of Lip-Bu Tan's brilliant strategy, or is it heavily reliant on just massive external macro tailwinds? Honestly, it's looking like a perfect 50-50 split. Yes, Tan's strategy of making those decisive cuts, offloading assets, and locking down those marquee partnerships was nothing short of brilliant. But we can't ignore that he also had the ultimate safety net. A $1 trillion AI capex boom literally lifted the entire sector. On top of that, immense geopolitical pressure to reshort chipmaking to the US, plus the US government converting its grants into a massive equity stake, provided unparalleled support. Truly, no previous Intel CEO ever had those kinds of macro tailwinds blowing at their back.
Which brings us to the final phase of our explainer today. Section 5, Risks and the Road Ahead. The optimistic headlines are definitely loud right now, but the hurdles sitting right in front of Intel are still huge.
I mean, famous short seller Michael Burry recently called Intel, quote, the poster child for the top. And sure, while that's just one guy's opinion, the valuation risk right now is extreme. Intel has been trading at over 90 times forward earnings. It has run roughly 50% past where average analysts think it should even be priced. The market has essentially priced an absolutely flawless execution from here on out.
And let's be real, flawless execution is insanely hard when you're staring down these remaining risks. First off, AMD is continuously gobbling up server CPU market share. Second, Intel's upcoming 14A node is basically a binary execution risk. If it slips at all, or if it isn't cost competitive, the entire foundry thesis breaks down. Third, the slow burn capital expenditure is immense. They still have massive fabs to fund all over the globe, and their free cash flow remains negative. Finally, having the US government own a 10% stake means serious political risk. Any change in administration or just a shift in priorities could drastically alter their support structure.
So, what should you actually be watching for to cut through all the noise? It boils down to this ultimate benchmark right here: $1 billion in quarterly external foundry revenue. Until Intel can cleanly break above that $1 billion mark in a single quarter, with named customers shipping in high volume, they are simply not yet a credible competitor to TSMC, regardless of what their stock price says today.
To help you track this, here is your forward calendar for the upcoming catalysts. First, keep a very close eye on the July 2026 Q2 earnings to see if their margins are actually holding up. Watch mid-2027 to see if that preliminary Apple agreement actually converts into real commercial silicon. And look toward the late decade to see if Musk's Terafab project actually scales on the 14A node as promised. Just remember, at a valuation of $109, the risk-reward ratio is materially worse today than it was when the stock was sitting down in the 30s.
So that leaves us with one final, pretty provocative thought to chew on. With a 400% turnaround driven equally by a ruthless new strategy and just historic macro luck, will Intel permanently reclaim its throne as the US foundry champion? Or, when this AI tide finally recedes, will this incredible rally prove to be the ultimate market mirage? Keep watching those foundry revenues, folks, because the numbers never lie. Thanks for joining me on this deep dive, and I'll catch you on the next explainer.